I got this question about scalping. There's so many scalpers out there, and they think that they're just going to keep making a quick buck by scalping the S&P 500, the NASDAQ. I guess it's because of the allure of making that quick buck. You know, you want to scalp, make your money, get out. But when you actually look at the statistics of the average daily range, you know, the volatility, the amount of contracts being traded, scalping is a very bad idea. And the reason it's such a bad idea is because the noise in the market, for example, in the NASDAQ, is probably something around 15 to 25 points on a normal day. So if you're trying to scalp inside that noise, you're going to be subjecting yourself to a firing line that's going to take your stop out so many times. And even when you hit your winners, they're going to be so small that they're not going to pay for your losses. So you're just going to continually feel like you're grinding back and forth. And it's sort of something that people usually come to their own conclusion after about a year or 2 or 3 of trading, assuming they're still in the game, if they haven't completely blown out from their scalping. Most people will reach this realization on their own. But I want to save you guys the time and the trouble. Don't scalp. It's a losing strategy statistically. You're not going to have the probabilities on your side. Your wins are not going to be large enough to cover your losses. Trading is like any other business. If you don't have enough money coming in to offset the losses going out, you're going to be net negative and you're going to fold up your tent and go home. And, you know, that's not fun. We don't want to do that. So try to set your targets for about 25% of the daily average true range, something like that. In the NASDAQ futures right now, it varies, but right now it's anywhere from 350 to 400 points per day in terms of the average range that the market will make. So I try to set my targets anywhere from 70 to 150 points. But if you pick the trade right and you're able to risk 20, 25 points, you know, now you've got a decent sized stop that if it gets hit a couple of times, but you hit that 75, 100 point, 150 point winner, your winners are going to way over cover your losses. And that's going to take pressure off your trading. You're not going to be as scared to lose. You're going to make better decisions. So you got to get in, put on that profit target for 100 points, plus or minus 20, 30 points, and hang tight. Let the trade play out. Let it ride all the way to your target.